Good day, Tea with Travis. Today is January 2nd, Friday, and I hope you had an awesome New Year's Eve and New Year's Day, and that you're back in the swing of things. All those New Year's resolutions, if you're a New Year's resolution person, have sustained 36 hours into it. Good luck with that. Good news and bad news. Good news is there's, I guess, emotional confidence in the market today, being that's the first day of the new year to be able to trade. The market was closed, obviously, yesterday on New Year's Day. But the Dow has crossed over 9,000 for the first time in over a couple months. We're up about 228 on the Dow. Mortgage-backed securities are taking a beating. They're down 62 basis points, so that's 0.5% on in fee. Meaning, so if you had a $400,000 mortgage that you didn't lock in on Wednesday and locked in today, it would cost you 5/8 more. So on 400,000, we're talking $2,500 or so. So it's pretty bad for today. But I think there's a knee-jerk reaction. We do have some technical factors to support rates improving back to where they were next week. The Fed's announced who's going to be the buyer of these mortgage-backed securities, that $500 billion that they're infusing into mortgage-backed securities to be traded and make more loans available. So there should be some guideline changes, as well as just availability and liquidity of the money in the markets. PIMCO and a couple other big bondholders and bond purchasers are committed to facilitate with the Feds on this money. So that's good news. So that does support, and this up escalator we've been in for the last month or so. An up escalator is basically a trending line that shows mortgage-backed securities have been improving, and every time they get down to this trending line, they bounce back up. And so we're almost touching that line now. It may take till Monday for us to recover. But not real positive for mortgage-backed securities, but positive for stocks, even though it may be emotional. Not a lot of reason to support the flurry of activity this morning. The dollar is weakening against foreign currencies, as well as oil's back up to about a 2-month high. We're up at $46 a barrel, up $10 from nearly 10 days ago at $36 a barrel. So we might see some prices at the pump go up a little bit. A few reasons. Again, dollar weakening, as well as just the unrest in Palestine and Israel, and then I guess the unknowns about what's going to happen to the oil over there. So right now, mortgage-backed securities are really just riding on the direction of stocks. Like I said, stocks are up. On Wednesday, announced unemployment numbers. The ongoing number is, again, the biggest number at 4.5 million. Initial jobless claims that are continuing to be paid. Last week's number was surprisingly, this week on Wednesday, jobless claims came in at 492,000, which they actually expected 575,000 losses last week. So 500,000 job losses sounds pretty dismal and ugly, but it was actually better than they expected. So the ongoing number, again, is worst all the way back to December '82, but in context of we have more people working and more population, higher population in the U.S. since then. So not probably the worst number ever. Outside of that, we're hoping that it's good to see the stocks improve, but mortgage-backed securities are back in the 5% range, in a low fives for APR. So hopefully we'll get that back here soon. So I wish you the best on your Friday. Have a great weekend, and we'll look forward to some positive news on Monday. So have a great weekend. Be blessed.